Welcome to Cheshire Corners. I'm Sebastian Coco, and I'll be your host as we trip through the looking glass. Welcome back to Psychospotlight. I'm joined by our newest guest, Justin Botillier. He's the CEO and he manages and runs Calyx CPA over in Oregon. So Justin, thank you so much for coming on the show. We're really glad to have you here.
Right on, thank you. I'm glad to be here.
Yeah, man, absolutely. So let's just kick things off with, first and foremost, what is a CPA? Like, what does this very generally mean? And why is your position important to the functioning of like any good business or really life?
Well, first of all, CPA stands for Certified Public Accountant, which is kind of the highest level of accounting credential in the accounting industry. And it's often synonymous or perceived as synonymous with accountant. But in reality, accounting is a very, very broad industry. It's kind of like your medical industry in that there are people who are operating in that industry with all levels of skills, experience, and credentials. MD, for example, in the medical industry being the highest, most well-respected at this point practitioner. Then you've got things like nurse practitioner, for example, that's becoming a lot more popular. And now people are seeing nurse practitioners as their primary care physician. So there are other credentials in the industry as well, but overall accounting is the function that is typically required while operating a business in order to stay in compliance with the taxing authorities, financial authorities, the regulatory, the fiscal regulatory bodies in the government. In CPAs typically are responsible for a few functions. Probably the most common is their functions as tax accountants. People who prepare tax returns, do tax planning in order to keep people's tax liabilities down. In addition, they can do audit functions. My firm is not necessarily insured to do what's called attestation functions, but those are the people who are called upon by banks and government bodies in order to do what's called financial audits for the recipients of that information to do the best that they can to know or rely upon the facts that the business's financials are in order. But accounting could also just mean tracking transactions on a daily basis, putting out financial reports, cash and business, cash management, business advisory. It's a very big spectrum, and there's specialists in each of that. There's people who do trusts and estates, and there's people that do retirement accounts, and there's people who do pension funds, and then there's big business accountants like public accountants who help with publicly traded businesses, and then there's small businesses, privately owned businesses, and then there's a handful of different types of business entities. So when you ask what a CPA is, it's a person who works in the accounting industry in probably a small capacity, but at large there's a lot of us, and there's a lot of people who work in this industry, and it's pretty important because without us, you run the risk of not staying in compliance, whether it's payroll. You know, if you're not taking care of your payroll properly, if you're not paying your employees properly, or your independent contractors, you're not doing your filing requirements for your independent contractors, you didn't set up your business entity to be taxed with an entity that is optimal. Maybe you just need bookkeeping and you're not tracking your transactions, and then you get audited, and then you have issues. So it's a pretty wide spectrum, and I didn't mean to keep going on that, but it's a big question that you asked.
No, that's totally fair. I mean, I'm glad that you, yeah, man. Money can be used in a lot of ways, you know. Like, so I'm very glad to hear you be like, yes, this is all of the ways that you could use a CPA, because that was absolutely the question. But I agree with you, that's a little bit too wide scope for what we do on this channel. It is a very good crash course, but let's narrow down the focus a little bit to CPAs who work specifically with regulated goods, substances, especially like cannabis and magic mushrooms. I mean, those are the two kind of hot ticket items when it comes to like sale and regulation in the last 5 to 10 years.
Yeah.
So how do you work with businesses that work with these substances? Both from like a sales and maybe like a services perspective, and even potentially a research perspective, because there's a lot of different businesses that work with these substances in a lot of different ways.
Yeah. Well, the areas that I feel are the most necessary for what we call trafficking businesses, where there may be a state program to have trade in a controlled substance, but it's still federally illegal. Anything included in the Controlled Substances Act, Schedule 1, Schedule 2, all of them are controlled and regulated. But it's specifically Schedule 1 and Schedule 2 where we've got issues. And the reason why is because of an IRS code section called 280E, where in the 80s, they wanted to make sure that trafficking businesses weren't able to get the benefit of their tax deductions and when they filed their tax returns, which is kind of a weird idea, but you know about like how Al Capone, for example, got caught and prosecuted not from his other illicit activities, but from evading or from not paying his taxes. So people who were in these federally legal enterprises got privy to that and were like, okay, well, we got to do our tax returns. And there were people who were prosecuted for these illegal businesses that did file their tax returns properly and did not then have any kind of tax ramification for being in that business. So in the 80s, during the war on drugs, the Congress enacted what's called 280E into the code section that pretty much disallows all deductions for trafficking business. And unfortunately, most psychedelics, aside from ketamine, are included as a Schedule 1 drug in the Controlled Substances Act and enforced by the DEA. And that means when you go to file your tax returns, you're not going to be able to take your deductions. And that is a big problem for you, especially for businesses that aren't able to allocate their cost to, say, like an inventory or a cost of goods sold. So I have an extensive experience my firm has extensive experience in the cannabis industry. That's a commodity type of activity. So you are actually able under 280E to deduct the cost of the product for resale. So you can deduct the cost of your flower. You just can't deduct the payroll and the facility costs and all the other things that go into operating the business. So that's a really difficult situation for those people. And psychedelics even potentially has a worse position because they're offering a service versus a commodity. They're not going to have the volume of activity that cannabis has, for example. So psilocybin here in Oregon, I'm watching these psilocybin businesses operate, and their costs for the actual medicine is very small. most of what they're doing is facilitation, caregiving, those kinds of things. They're renting space for people to have sessions, and that is all non-deductible according to 280E, and that's a big problem. I don't want to scare you. Your audience. I don't want to scare your audience. There are ways. There's precedents. There's tax court precedents. There are other strategies and methodologies that experienced accountants in this industry know and can recapture a lot of those disallowed deductions.
I mean, that's awesome. Like, yeah, no. That's exactly the kind of thing that we want to talk about, is the 280E kind of, I don't want to say workarounds, because it's not a workaround, it's a fully legal kind of path through the mess that the war on drugs has created. But I want to talk about those in like just a second, because like, let's put 280E on a shelf for a second, because you've talked to me a lot about like doing this work with CPAs, doing a lot of work with regulated substances. It's a really interesting, strange kind of, what am I trying to say? Juxtaposition of like highly regulated work and highly contentious, substances that kind of, it feels like those almost butt heads. So can you tell me a little bit more about your personal history with these substances and your personal history with like the legislation around these substances? Because clearly it seems like you had a really unique personal journey to kind of get to where you are today.
Yeah, no, I mean, I had a pretty troubled childhood. The people in the psychology world call it high risk, low income kids, latchkey kid kind of thing, single mom, kind of serial relationships, very unstable in terms of moving around, violent, cycles of physical and emotional, sexual violence, or not sexual violence, but abuse in the household. And I got pretty screwed up for a long time because of that. Still going to therapy for it. But the biggest thing that happened was when I was 17, before having experienced an altered state of consciousness, I was introduced to psilocybin. And almost magically, I got the opportunity to do a session in a beautiful setting. As we know, set and setting is very important. And I had the most mind-blowing experience of my life. And I immediately recognized that, the profound impact that experience had on me to actually open my consciousness and to then experience other people and myself differently, having more empathy for others, having empathy for myself, having empathy for the perpetrators. It was probably like, years of therapy in one 5-hour session. And so I was obsessed with it
awesome, man.
After that. And I even was growing psilocybin and irresponsibly hooking everybody up I knew with psilocybin, mushrooms, thinking that this was going to change the earth, and I studied cannabis and I studied psychedelics, and I did chase it for quite a while and never really had the same experience again. But I'm definitely a big proponent of the benefits of cannabis and psychedelic when used responsibly, and was also very interested in the legalization of cannabis, and wrote papers on it and did college papers and all that. And then I started my career. I wanted to do psychology, but I'm also kind of a homebody and didn't really want to move out of my small town, and so I was immediately attracted to accounting when I was taking accounting classes in college, which is a strange thing to say, but it uses all the various same problem-solving parts of the brain as like someone who is a problem-solving a medical issue or something like that. But except for it's around people's money, and as you may know, people consider their money their life force. In fact, some people care more about their money than they do their own health. So therefore, people care about their money. And so I still am helping people, but from a different perspective. And I ended up acquiring, I became self-employed shortly after I graduated from high school. And I started to acquire, by that time, the medical cannabis industry was underway, and I started to acquire farms, because I'm from Southern Oregon and we have a very big outdoor cannabis industry here. And then...
Yeah, I was gonna say, like, Southern Oregon and Northern California is the biggest in the world. Humboldt County specifically, from what I know, is like, that's where all the weed that you smoke is grown. If you are not in like a legal state that has its own grows.
If you're smoking like high quality outdoor, then that's where it's from. You're not going to get a lot of high quality outdoor from other places in the U.S. But I won't go into how my advocacy for like outdoor versus indoor, etc. It's different. It's a different conversation. But anyway, I got into cannabis really heavily. I sold my general. By that time, by the time legalization rolled around in Oregon, I sold my general practice, and I went all into cannabis because I just enjoyed what I was doing too much working with those guys, and they really needed my help because of the 280E thing. And because of that, we've now become a national firm. We work with cannabis business all across the United States. Meanwhile, Oregon has rolled out psilocybin now, and we have become like I'm going to say the number one, I guess, or the largest service for the psilocybin industry. And I know this because I know how many licenses are available, and I know how many people we work with, so I could say with confidence that we are. And they have all the same problems, if not more complex issues because of the service side of things versus the commodity side of things. But I could not be happier to be in this space. Like, I feel very fortunate and very blessed that I get to contribute to the psilocybin industry or the psychedelics industry at large and help push this forward, because I personally think it's going to change the world.
No, man, I totally agree. Hey, you're preaching the choir on that one. Like, my whole job is trying to get the message out there, you know? That's what this YouTube channel is all about. So totally, I'm with you on that one. As you were talking, there's a question in my mind that I wanted to ask you. I don't think it's necessarily like the most productive question in the world, because I think it's something you've been posed with before probably, but I still want to know your perspective on it, because the traditional psychedelic frame of mind is very countercultural, very away from, government, away from the system, away from the machine, that kind of mentality. But CPA work is very much, in that regulatory machine, bureaucratic, we'll say that, state of mind. So do you ever, like, from a personal perspective, have trouble reconciling those like two lenses that you have to look through? And do you ever kind of, I guess, do you think clients sometimes, do they come at you from a less trustworthy state of mind because they're used to regulation really stifling their work?
Yeah, no, I don't think anybody comes at me. So to the first part of your question, is there a reconciliation process that has to happen for me, because one side of it is very analytical, and that kind of comes from that part of the brain. I guess you call it left brain, and then a lot of the industry is a very sensitive, emotionally involved kind of part of it. And fortunately for me, I do a little bit of both. I do work in like the tax code, which is a very like mind formation, kind of like a made up thing that people have made up. And then, but yet I help people to navigate those and fulfill their, essentially I'm trying to help people fulfill their dreams, you know, and money is important as much as we think that money is bad and dirty and the root of all evil and etc. So money corrupts, all that stuff. That's all BS in my mind. It can be addictive, and if people are view it or have you know, treat it in a way that is bad, just like any tool, then that's a problem. But otherwise, it is what helps keep a society, and so therefore it is a part of life. Like you can't get around it, and just like we have a society, there are laws and there are rules, and as much as we don't like most of them or some of them, we have to subscribe to them. We have to operate within them. And so I feel very fortunate that I'm doing both. I get to use the problem solving side of my brain, and I get to use the empathy side of my brain. And I really appreciate doing that. And one thing I want to say is like, one thing that I find that I don't think people appreciate enough is focusing on actually what works versus what doesn't work. It's really easy for us to focus on what doesn't work, but most of the time when we're doing that, we're missing the 99.8% of everything that does work. You know, like whenever you're driving down the road, you just have to think about how much knowledge and energy went into getting society, and you for that matter, up to the point of being able to drive a Tesla or whatever down your local street. I mean, it's mind-boggling if you think about it that way. And
no, honestly, I mean, the fact that we're a bunch of fleshy, like, stupid animals that come out of, like, that are just pushed out of a womb and know nothing, and now it's, like, commonplace for all of us to be in 2-ton vehicles, flying down asphalt strips, not crashing into each other on average, like, not over 90% of the time, depending on where you're living. But no, you're totally right. Like, I completely agree with you that sometimes we need to focus on the positives and what is working in society a little bit more. And to your point, how money works to motivate people to build great things, rather than looking at it as a, greedy, source of avarice kind of thing where that's going to corrupt people. It's more of a, well, maybe those people were already corrupt in other ways from whatever happened in their life, but they just use money as kind of their tool for that corruption. That's definitely how I see it. I think a lot of
and I think
a lot of modern neuroscience and like psychology of mental illness would agree with that.
And I think they're actually a minority, and unfortunately some people can have huge negative impacts, but in general, I like to give people the benefit of the doubt.
I'd say let's take 2ADE off that shelf really quickly, because we mentioned it before, you mentioned it a little bit in what you just said. Can you talk more about some of these, again, not workarounds because they're totally legal, like paths through kind of the war on drugs, but can you tell me a little bit more about kind of the structure of 2ADE and how you guys at Calyx are creating a path for healing centers and other businesses kind of through the mire created by the war on drugs?
Yeah, so of course there are various businesses in any industry. There's direct plant touching, some medicine touching businesses, and then there are the people that work in the industry, but around it, providing services and other ancillary businesses like ourselves. And anybody who, if you're not touching the plant, you're not the one delivering the plant, you're not the one receiving the money for it, then you're probably not subject to 280E, and you can pretty much get away with operating like a regular legal business. There are some people who might dispute that and say, well, if you're in the same room with somebody who is undergoing some sort of session, and even though you're not the one who provided that plant, that substance to them, then you may also be subject to 280E. I think from my experience in the cannabis industry and now the psychedelics industry, I think that's going to be a hard argument because it doesn't fit the trafficking definition, which is essentially the sales, manufacturing, and delivery of a controlled substance. So if you're not the one who like brought it, like even if you're driving the truck, you're delivering it, right? So there's something to be concerned about there. But if you're just in the same room, providing like a therapy session or a caregiving session or caregiving during a session, then I think that you are not going to be subject, and just like us, we can be treated as a regular legal business. Now, if you are manufacturing, delivering, wholesaling, adding value added, doing value added processing to it, not necessarily testing.
Really basically
Yeah.
anything. Sorry, but
Yeah.
to get a good understanding for myself, anything that gets the product from the ground or the lab to the consumer.
Yes.
Once it's post-consumer, you don't have to
Yeah.
worry. But pre-consumer,
And the lab, and I
okay.
don't, and testing labs won't even qualify because they're not really taking possession of it. They are not.
Oh, I was even more saying from the lab, from like the
processor.
synthesis of ketamine.
Yes.
And the synthesizer.
And again,
right?
ketamine, and I
So
want to be
testing
clear for
facilities, yeah.
those people who are listening that ketamine is not it's Schedule 3. It's not subject to 280E. So I'm talking about all the other psychedelics, including MDMA, which is going to be approved, FDA approved, probably sometime soon, but it's still Schedule 1. So okay, so I'll try to get to the point. So you could potentially, depending on where you are in the industry, you could potentially have very significant impacts, like a 80 to 90% effective tax rate. So if you make $100, you might end up paying 80 to 90% tax on that $100, which is impossible, right? You can't stay in business with that kind of margin. So there are a couple of methods that the accounting industry has come up with to mitigate the impact of 280E. One is the CHAMPS method. Californians helping people with medical conditions or something like that. I can't remember exactly what CHAMPS stands for, but it was a lawsuit that they were a nonprofit organization that they were medical people providing marijuana to their clients. And the IRS, they were a nonprofit, 501c3 nonprofit. The IRS audited them, stripped them of the 501c3 designation, and subjected them to the highest possible tax ramification due to not allowing them to take any deductions. But they fought that. They fought it because most of their sales were having to do with caregiving. They were being paid to provide medical services or medical related services. They were providing a service, and they happened to also provide them with cannabis for medical marijuana. The tax courts ruled in favor of them, and they got all of their deductions that were related to the service part of their business back. So that's one angle that we're coming at with this. So this is not a commodity like cannabis. This is a service that you are providing, and the medicine is a very small amount of your revenue. And therefore, if you do a good job tracking the service versus the sale, you could definitely reclaim many of the otherwise disallowed deductions just from tracking the various services that you're providing or the various revenue streams you're providing in the business. Some people say, okay, well, you want to have separate businesses completely. One is a non-plant touching business, the other is a plant touching business. One is not subject to 280E, the other is subject to 280E. Okay, so that is one strategy. The other strategy is what's called the 471C methodology, which is something that was passed during the Tax Cuts and Jobs Act in 2018, where they essentially Congress wanted to simplify the small businesses' ability to choose their inventory methodology. And I know this is a bigger, more complicated thing. It's probably a little bit more hard to understand, but 471C pretty much allows small businesses to capitalize inventory and therefore calculate their cost of goods sold, which is the deductible part of a person's expenses, based on their books and records. So if you are capitalizing or counting labor and facility costs and many of your other essential expenses, such as licensing and security and all of these things, and you're calculating that into an inventory calculation, you can then claim those on a tax return under IRC Code Section 471C. So those are the methods.
Okay, that makes sense.
We're using a combination of both, I think. We have yet to do a tax return because Oregon just rolled out their service center licenses in 2023. So we're going to be filing those tax returns in 2024, but I'm pretty confident, just based on our history of having worked with the cannabis industry for as long as we did, working with other tax attorneys, we're pretty confident that we will have the methodology that are going to help our clients to mitigate their impact, their 280E impact. We can't eliminate it. There's no eliminating 280E. That would be a big, big red flag. But we can get those businesses' deduction or tax liabilities down to near legal levels, meaning as close to if you were an ordinary business.
No, that totally makes sense. Obviously, it's burdened with like, here is a bunch of tax and accounting language of like deductions and but I think you do a really good job of like distilling it down into the basic essentials of like, for me personally, having that first question of like a little bit more background of CPA knowledge has made this a lot more clear of like where to go from here as far as, you know, what a potential business would use, what method of potential business would use. I did want to ask though, so as you said, there's no like data available technically because we are seeing Oregon with the first healing centers having their first taxes being filed this upcoming year. So will the data on how that's working be available this upcoming April? Will it take longer than that? Kind of, when will both individual consumers, people looking to start businesses, and like regulatory bodies, when will they have a better idea of how all this is going to be handled on like both a federal and state level?
Yeah, I mean, right now we have a pretty good understanding of how it's going to go forward in terms from a 280E perspective and how we're going to deal with that. Like I said, if it wasn't for 280E, you guys would just be a regular business and you would have regular industry nuances that need to be addressed, but other than that, you wouldn't have like this tax penalty that is put on trafficking companies by Congress. And so we're pretty confident that the method that we're using, those two, either one or the other or both, will be highly defensible in case of audit. The only the bad thing is that we won't know 100% sure. We cannot be 100% sure until it goes through the process of being litigated by the IRS, meaning there may be an auditor who you might get an audit and they may disagree with the approach. But here's the thing is, if they disagree with the approach, they're just not informed. And that happens. There are IRS agents that don't understand trafficking businesses. They don't understand 280E. They look at it from a very surface viewpoint. And so they could either say, okay, no change. We recognize your method and it seems fine. And that has happened in the cannabis industry too, where the methods they work and there's no change. Or you get somebody who is just like, I don't care, it says it's subject to 280E, we're going to disallow all your deductions. Okay, so now what you have to do is you got to go to tax court and you have to battle it in court, which typically they try to settle, and you'll get teamed up with somebody from the tax court that will review the case, and they'll say, okay. And really what they're doing, I think, is this like worth taking it to the next level? And if it's not, let's just compromise here and move forward and not make a spectacle out of it. Now, there may be people in this industry that will be made a spectacle by the IRS because that's how they keep people in compliance, right? It's the people that they come down on, and they come down on them hard, and they make sure that people are listening or are interpreting the rules the way they interpret the rules. And if they think there's no justification for deductions, then that's what they want. That's the message they want to get out to you, so you stay in compliance, okay? But if you have a really good, well-done tax return with a really good defensible argument, and you are clear when you file those tax returns that you're not going to settle with the fallout of an audit and an auditor that is not going to, meet you in the middle or give you most of your deductions, you kind of demonstrate in the tax returns that you are ready to go all the way with this, then they will likely back down in settlement. Now, I'm not a tax attorney, I'm not an attorney, so I don't want to speak for them, so I don't know. I'm speculating here. But I do know that at this point, 471C, that methodology that we've been using for the cannabis industry, specifically the dispensaries, has not been litigated yet. Like, nobody has said, okay, 471C is no good, and that's been in effect since 2018. So there is even evidence that the auditors are not arguing 471C. That's that argument. And we already know that the CHAMPS method works because it won in tax court. So I think that with a properly paired return, with the proper inventory elections, with the proper disclosures, there's lower hanging fruit. There's always lower hanging fruit. And the IRS is going to go after them and is going to make a spectacle out of those people. But if you have the right professionals in your corner, and you're going on grid and you want to do everything right, then there are the professionals that are going to be able to take the position for you that is the right position, aggressive but defensible.
Cool. Awesome. Yeah, no, that totally makes sense. I guess my question was really focused around what the previous cases, what the previous litigation has been. Because
there has been, as far as I know, from the psychedelics industry, there has not been. And then the best case. But
even hearing from you about the CHAMPS case, yeah, and specifically that the 471Z has been in use by dispensaries since 2018. I mean, that right there is really good hard legal evidence of they're not going to try to pick this up, at least immediately. And if they do, there's going to be a really hard path forward of, well, why is it fine for dispensaries? Why has it just been picked up now? Why have we had 5 years of quiet, even though we're doing all the same things? I'm a huge advocate for the regulation personally, and I think that if there was more productive compromise, you'd see these people that are, have a history of underground work be really enthused to be worked with the government and be above ground going forward.
Well, I think operating through a state legal program is going to help that. Unfortunately, most states do not have a psychedelics program yet. I think a good strategy that is being used, I've seen a few times now, is ketamine businesses, getting into a ketamine business, setting up your business around that, with the eye on psychedelics, like other psychedelics legalizing in the States, making sure that, okay, if there's going to be zoning requirements or where you're going to put your facility, making sure it's not located near a school, for example. That seems to be always the number one thought, right? And so just get in a position to make sure that the location isn't going to be in a place that is likely going to be approved, a commercial, most of the time a commercial location, and get into that business. From what I understand, ketamine, I've never tried ketamine, I've never done a ketamine session, but from what I'm hearing and understanding now is that it has a lot of benefits, and so people can go kind of in that direction and support that industry, and then they can pivot to other psychedelics once they roll in. Once the programs get sussed out and they roll out in their state. One thing that I did want to make sure that people understand is there's much more to what I've been saying to this whole process. And one of those things that you should probably be prepared for, and not necessarily just be skeptical of the entity that you are being told to set up. So for plant-touching businesses, you probably want to start out with an LLC being taxed as a C corporation, okay? So with emphasis on the taxed as a C corporation, all right? Because there's various tax entities, partnerships, sole proprietorships, S corps, C corp. Okay, C corp is gonna put the icing on the cake for your defensibility. So if say the IRS says this guy Justin, he's full of shit, let's audit his clients or whatever, or he's like they throw me under the bus or whatever, and they may take a less beneficial approach, or they take 280E to the max, right? And they hamper you with a bunch of tax debt, for example. A C corporation contains that debt, so it doesn't affect you personally. That's what I was trying to get at. If something goes down and they make an adjustment and it's not in your favor to a substantial degree, at least it's contained within that business structure, and it doesn't go to you personally. Whereas a partnership and an S corp, or even a sole proprietorship, you're paying the tax that your business's income is being generated from. So the income from your business flows through to your personal tax return. You pay the tax, you owe the tax. So if they make a big adjustment, that also flows through to you. And now you're hampered in huge amounts of tax debt, which I have many clients who are from previous audits and whatnot, or previous accountants that didn't take any approach and just hampered their clients with huge tax debts. At least with a C corporation, it's contained in it. And as long as you're reasonable with paying out wages, and you can take a wage still, and you can pay out essentially the profits of your business, and if you don't have the money to pay those tax debts, then those tax debts stay they can stay. And there's really nothing that can be done about it. And eventually, after 10 years, and I know 10 years is a long time, those tax debts then just fall off. You are no longer subject to that tax debt anymore. So I'm just saying that, like,
it's a long time, but it's better than being in debt for the rest of your life, you know?
And there are statutes of limitation, but the nice thing about it is they don't lien your properties, your personal properties. They don't garnish your personal bank accounts. And if you're working with them from an entity perspective, then they have to negotiate you from an entity if it's a C corporation. So that's a very important piece. And definitely consult with an attorney. You can shop around your attorneys. You can shop around your accountants too. I don't mind. But you want those people in your corner for sure.
So let's take 280E off that shelf and talk about that one more time because we mentioned a little bit previously, but we didn't really dig into it. So can you tell me a little bit more about the bill itself, and then how it's considered differently from like a federal and state level? Because obviously 280E is a federal bill that federally regulates how taxation works for these businesses, but how the states allow the businesses with regulated goods to actually function is like kind of separate from that. So if you could talk to us a little bit more about 280E generally as a bill, and then how these businesses are, I hesitate to say using workarounds, because they're not workarounds, they're fully legal like paths through 280E, but how businesses are avoiding the tax ramifications of fully getting slammed by 280E.
So 280E is a code section of the tax code that essentially disallows a business's tax deductions or expense deductions for trafficking businesses. So if you are considered a Schedule 1 controlled substance under the Controlled Substances Act and enforced by the DEA, then you are also subject to 280E. 280E disallowing your business deductions. So if you can imagine how impactful that might be if you're not allowed to write off your payroll, your facility costs, your licensing fees, which in Oregon here are pretty substantial. I've seen businesses subject to an 80 to 90% effective tax rate. 280E was implemented in the 80s during the war on drugs as a tax penalty to make sure that these trafficking businesses had some sort of tax penalty. Because as you know, they got Al Capone, right, for tax evasion. And so other businesses and federally illegal businesses, such as drug trafficking, wised up and made sure they were filing their tax returns. And then Congress didn't like the fact that these businesses that might have got a slap on the wrist weren't at least paying a substantial amount of taxes and receiving a tax penalty. So they put in 280E. Now, 280E is only substances that are considered Schedule 1 and Schedule 2 drugs are the only ones that are impacted by 280E. Schedule 3 drugs such as ketamine, which is, from what I understand, the only psychedelic that is not subject to 280E. So ketamine businesses can be treated like ordinary businesses. So the psychedelics industry may be even more impacted by 280E than the cannabis industry, because the cannabis industry is more of a commodity business, and it could actually write off the purchases for resale, which are the flower, the edibles, the tinctures, the oils, the vape cartridges. All of that can be deducted by a business, and that is most of their revenue. So what they can't necessarily write off, and specifically for dispensaries, which is more of a service. They're selling cannabis, but they are providing the service of creating a place for people to go to buy the product, customers at large. And so they're typically not allowed to write off any of their payroll, any of their facility costs, and they're the ones who are hugely impacted by that. So in Oregon, we now have service centers, and so therefore, the psychedelics industry is more of a service business versus a commodity business, because the amount that you pay for the substance or the medicine is a lot, you buy a lot less of it, you consume it less frequently, and the business that surrounds that is much more of like a caregiving business, the therapeutic benefits. You might be doing yoga, you might be doing other therapeutic kinds of things within your organization, and really it's about the session and less about the purchasing of the commodity. And therefore 280E is pretty much saying, well, you can't, if you're a trafficking business, like you are on premises selling psilocybin, then you are in the business of trafficking and therefore subject to 280E, so therefore you cannot take your deductions, most of them. Fortunately, there are a couple of methodologies that we're looking at and approaches that we're taking. One is the CHAMPS method, which is essentially segregating services from the selling and trafficking of the medicine. And CHAMPS stands for Californians Helping to Alleviate Medical Symptoms. I think that's what it is. And that was a tax court case when the IRS audited a nonprofit 501c3 who was providing medical services while at the same time providing cannabis. The IRS stripped them of their nonprofit status and taxed them at the highest tax possible, disallowing almost all of their deductions. And that bankrupted them, but they fought back, and ultimately they won. And the tax court came back and said, well, most of this company's income was from the services that they were providing, and the cannabis sales was actually very small. So they allowed them to take there and recapture their deductions, and ultimately they won that case. So because psychedelics are more of a service, similar to that organization, there is kind of an argument that we can take that allows you to take your deductions because your primary form of income is the service and not the selling of the medicine. Fortunately, we have another method that we use in the cannabis industry. It's called 471C, which was a tax code implemented from the Tax Cuts and Jobs Act in 2018, where Congress simplified for small businesses the inventory methodology that we can choose. And essentially what they say is you can base your inventory tracking and your inventory calculation based on your books and records. So that means if we decide, well, part of being in business in this trafficking industry is providing these services and providing the facility, we want to track that, and we want to include that in our inventory calculation, and therefore also our cost of goods sold calculation. They go hand in hand, inventory and cost of goods sold. So we can essentially move a lot of our expenses up into being deductible because it is all part of the operations of this trafficking business. So we've got two ways to deal with that. An important takeaway is that when you are setting up your business, if you are in a trafficking business, you're delivering, you're manufacturing, you're selling a controlled substance, then you probably want to be taxed as a C corporation, because C corporations pay their own taxes, and the net income of that business is taxed at the corporation level. And unlike sole proprietorships, partnerships, S corporations, the income doesn't flow through to you personally, and you don't personally get taxed on that, on the net income of the business. Just the C corporation does. So if the IRS doesn't like our methodology and they come back and try to hammer you with taxes, then the tax stays in the corporation, and they can't put liens on your personal property, they can't garnish your personal bank accounts, they have to deal with you within the C corporation. And that's a really good protective layer. And then there's also ways of dealing with that debt once it's there that are a lot less prohibitive than when it's attached to you personally. Now, it's also important to state that if you are not selling, trafficking, or even touching the medicine, if you're doing some sort of facilitation work or providing some other ancillary services, then you are likely not subject to 280E, and you can treat your business like a regular, ordinary business. And so that's kind of an important designation. Now, there is some dispute that says, well, if you're on premises while sessions are going on, then the IRS could argue that you are potentially subject to 280E, but like I said, the CHAMPS method, kind of is like arguing that even if you are plant touching, if you're providing a service, you're probably not going to be subject to 280E for those expenses. So
yeah, no, that totally makes sense. And to kind of to interject and to put like a cherry on top of that, I think the local legislation around how all of these facilitation sites and all that like that is going to be one of the biggest things of like can you actually treat this as a 280E or non-280E business almost, you have to everyone's gonna have to worry about the state side of things as well, which is still kind of like it's kind of out there in Oregon. Here in Colorado, I know we're still hard at work making it happen, so it's hard to say this is how things will function, but I think that's an important player in the game that we haven't thought of too much yet,
Yeah, I mean, the states definitely, complying with the state regulation will either benefit or hurt you from complying with the federal taxes. For example, in Oregon, you're not allowed to make any medical claims. There's no they don't say therapy. You can't use therapy or therapeutic or anything like that in your promotional material. You can't say that you are providing some sort of benefit. So unlike CHAMPS, where they were providing medical benefits and that was part of their thing, in Oregon you can't say that. So that kind of inhibits our case a little bit. I don't think it's detrimental, because everyone knows that you are providing medical benefits when you have people in your office doing sessions for addiction recovery, for example. So, so that's the service you're providing. You're providing help, assistance with facilitating this addiction recovery. The purchase of the psilocybin is very, very small compared to all the other stuff that you're doing there. So I think that the IRS would be hard pressed to argue that you're not providing a service and what you're doing is essentially operating a crack house. Okay. Because that's the way they look at it. They look at it as you might as well be cooking meth if you're growing mushrooms. Obviously, that's not the case.
Yeah, that's so interesting. it's gonna be a weird like in between of all of these. So I'm just thinking from our end, like Yuma Way has its own plans with wanting to, getting into the psychedelic space and just different, varieties of how to do that. So I've talked a lot with a lot of different people about business ideas, where things are gonna go next, all those kinds of things. So it's really interesting to hear at least the current federal perspective, because that's like your bread and butter, man. Like clearly, that's what you know the most about. So I really appreciate from like a personal perspective to know more about that. And so kind of on that note, we just talked about like the local regulations, the legislation that's currently becoming a reality in Oregon and Colorado. And so as this starts to form and as more and more states start to adopt similar policies, what do you think is going to be the most productive way to integrate like the financials surrounding regulated substances into normal business life? And yeah, I guess, what do you think are going to be the obstacles surrounding that integration and some of the key players moving forward to really make sure that as a society we can use these substances and still have a good regulatory hand on how we're using them?
Yeah, I mean, the biggest obstacle is going to be the operator, first of all. You really need to have some sort of respect for business acumen. And I know that we don't like that side of the business aspect. We don't like the bureaucratic side. We like the caregiving and the service that we're providing. But you've got to take the time to work on the administrative side of things and making sure that you're staying in compliance, you're doing your bookkeeping, you are crossing your T's and dotting your I's that way, and taking time to do that, because it's very easy to get lost in the fervor of providing the service and being client and customer focused, but that other side of things is highly needed and there's a lot of fallout. And I'm not talking about just for not for trafficking businesses, for federally illegal businesses. I'm talking about all businesses, and it's something that I've seen over and over and over again, is that it's the people who aren't at least doing an initial consultation with their accountant or using an attorney to go over the operating agreement they might have done up with ChatGPT or something like that. Like, I realize that people who are bootstrapping it need to cut their costs, but you need to have communication with the people like myself or with attorneys. You need to have somebody in your court who is doing bookkeeping. You want to be aware of like payroll law, for example. Not everybody can be independent contractors all the time. You don't want to be paying people under the table. You want to be on the up and up with that, filing the right tax forms and all that stuff. And I know that's all like boring stuff. It's not sexy. It can be expensive, but it's something that you need to spend at least 50% of your time on. And then as far as like rolling out in this industry specific, some of the things that I'm kind of seeing is how cost prohibitive. In Oregon, it's like $10,000 for a manufacturing license or a service center. Like $10,000 is a lot of money for people. So it's gonna take money to make money. If you can't afford it yet, but you want to do some other psychedelic work, there's the ketamine industry. I'm not sure exactly if the state has, like Oregon or other states have like requirements. You may have to be a licensed therapist or something like that. But I know that people who are getting in the industry who are anxious to operate in their state, and I've seen this a few times, is getting into ketamine and providing ketamine sessions and therapy, and then with the idea of maybe opening up something in the future. So that's a really good approach. That seems like a smart approach.
Cool, awesome. Well, Justin, do you have any more thoughts? Anything that you'd like to plug on the channel, maybe? Like the website for Calyx CPA or anything else like that?
Yeah, as of this recording, I'll be at the Wonderland in Florida, speaking there next week, this upcoming week, so on Thursday, so that's probably too soon for you. I'll be at Remind during Marijuana Business Conference, which is the psychedelic forum there, and I'm on a panel there. Other than that, visit my website. I'm going to start doing a webinar, like a regular webinar, and just inviting everybody who wants to come for Q&A. I don't have really time to talk to everybody one-on-one over and over again, but if you're considering being a client, of course, I'll talk to you, but of course I have to be choosy about who I am spending my time with because I only have so much of it, like everybody else does.
No, totally, man, totally. So guys, check out the description for that website with Justin's webinar. If you have any questions, reach out to him. Hopefully you guys can start up a good arrangement. So Justin, thank you so much for coming on the show. We really, really, really appreciate it, man. And yeah, I hope you have an amazing day out there in Oregon.
Thank you.